The petrodollar is a term used to describe the US dollar that is used to buy oil in the global markets. It is the currency of choice for oil-producing countries, and is the dominant currency for international trade and finance. The petrodollar has been a major driver of global economic growth for decades, with its value being closely linked to the price of oil. This paper will explore the history of the petrodollar, how it has shaped international relations, and its current and future implications for the global economy. The petrodollar system was created in the wake of the 1973 oil embargo. The embargo, imposed by the Organization of the Petroleum Exporting Countries, OPEC, in response to the U.S. support of Israel in the Yom Kippur War, drastically increased the price of oil and caused a global shortage. In response, the U.S. and Saudi Arabia entered into an agreement in which the Saudis agreed to price oil in U.S. dollars, and to invest a portion of their oil profits back into U.S. Treasury bonds. This agreement was known as the Petrodollar Accord, and it served to stabilize oil prices and protect U.S. economic interests. The Petrodollar Accord also had implications for international relations. It ensured that the U.S. was the dominant player in the global oil market, and that the U.S. dollar was the currency of choice for oil transactions. This gave the U.S. a great deal of economic and political power, as it was able to influence the actions of oil-producing countries through its control of the petrodollar. Current implications: the petrodollar is still the dominant currency for oil transactions, and it is also used for a variety of international transactions, including banking and finance. This has resulted in the US dollar being the world's reserve currency, meaning that it is held by central banks and governments around the world as a form of international reserves. As a result, the US dollar has become the de facto global currency, which has allowed the US to maintain its economic and political dominance. The petrodollar also has implications for international trade. Its dominance has made it the currency of choice for international transactions, and it has become the benchmark for pricing commodities and services. This has resulted in the US dollar being overvalued, which has made it more difficult for countries to compete in international markets. Future implications: the future of the petrodollar is uncertain. Recent years have seen a shift away from the US dollar as the currency of choice for oil transactions, with countries such as China and India increasingly using other currencies. This could result in the US dollar losing its status as the world's reserve currency and being replaced by a shared global currency. In addition, the increasing use of renewable energy sources could reduce the demand for oil and lead to a decrease in the value of the petrodollar. This could result in a decrease in US economic and political power, as the US would no longer be able to influence the actions of oil-producing countries. Conclusion: the petrodollar has been a major driver of global economic growth for decades, and its future is uncertain. The increasing use of other currencies for oil transactions and the shift to renewable energy sources could result in a decrease in the value of the petrodollar and a decrease in US economic and political power. However, the US dollar is still the world's reserve currency, and it is likely to remain so for the foreseeable future. It is therefore important for countries to be aware of the implications of the petrodollar system and to be prepared for any potential changes in the future.